If you're completely new to trading, you've probably heard the word Forex. But what exactly is it? What are people actually buying and selling, and why does the market exist in the first place? In this lesson, we're going to break Forex down from the beginning, in simple terms, so you can understand how the foreign exchange market actually works. So, what exactly is Forex? Forex is simply short for foreign exchange. At its most basic level, it means exchanging one currency for another. For example, you might exchange US dollars for euros. But when we talk about Forex trading, we're not simply buying a currency to put in our wallet. We're trading one currency against another based on how their relative values change. And this takes place in a huge global market, operating around the clock during the working week. That basic idea, one currency against another, is the foundation of Forex. So, why do we exchange currencies? It happens for many reasons, in everyday life, business, investing, and trading. When we buy goods or services from another country, we usually need to pay in the country's currency. When we travel abroad, we exchange our money so we can spend it locally. Businesses also exchange currencies when they work with international suppliers, receive payments, or operate in different countries. Investors exchange currencies when they invest in assets or opportunities overseas. And then there's Forex trading. Forex traders aim to profit from changes in currency values. The important thing to understand is that every currency has a value relative to another currency. That difference in value is what makes currency exchange possible, and it's at the heart of the Forex market. Now let's look at Euro, US dollar, the most traded currency pair in the world. EUR, USD is the exchange rate between the euro and the US dollar. It tells you how many US dollars are needed to buy 1 euro. For example, if EUR, USD is 1.0850, 1 euro costs 1.0850 US dollars. The euro is the base currency, and the US dollar is the quote currency. The pair is influenced by economic data, interest rates, news and events, and market sentiment. Understanding EUR, USD is an important foundation for learning Forex. Now let's look at what the price actually means. If EUR, USD is at 1.0850, 1 euro costs 1.0850 US dollars. If the price rises to 1.0900, the euro has strengthened against the US dollar. If it falls to 1.0800, the euro has weakened. And if the price stays at 1.0850, the exchange rate hasn't changed. So, simply put, a higher EUR, USD means a stronger euro, while a lower EUR, USD means a weaker euro. Trading follows a simple process. First, you analyze the market. You look at things like charts, trends, price levels, and important news. Next, you make a decision. You decide where you want to enter, where you might exit, and how much you're prepared to risk. Then, you take a position. You buy if you believe the price may rise, or sell if you believe it may fall. Once you're in the trade, you watch the price move. The market will determine whether your idea was right or wrong. Finally, you close the trade and get a result, either a profit or a loss. But successful trading isn't about being right every time. It's about following your plan, managing your risk, and staying consistent. Forex isn't just used by individual traders. It's a global market involving many different participants, each with their own reasons for using it. Banks facilitate currency transactions and provide liquidity to the market. Businesses use Forex when they buy, sell, or operate across different countries, helping them manage currency risk. Governments and central banks manage foreign currency reserves, implement monetary policy, and can act to support the stability of their currency. Investors may trade or hold currencies as part of a diversified portfolio, seeking potential returns. And then there are retail traders, individuals who participate in the market for potential profit. So while we may all interact with Forex differently, we're participating in the same global market. One market, endless purposes. Before we go any further, it's important to understand what Forex actually is, and what it isn't. Forex is a global financial market, where currencies are exchanged and their prices move as market conditions change. But Forex is not guaranteed income. There are no guaranteed profits. It's also not easy money. Trading requires knowledge, practice, discipline, and risk management. And Forex is certainly not a get-rich-quick scheme. The goal shouldn't be to make money quickly. It should be to understand the market, develop good habits, manage risk, and continually improve. Because the right mindset today helps build better habits tomorrow. Focus on learning, focus on improving. Let's quickly recap what we've covered in this lesson. You now know that Forex stands for foreign exchange, the global market where currencies are exchanged. You understand that currencies are traded in pairs, with a base currency and a quote currency. You've also learned that a currency's value is always relative to another currency. And as prices move, there is always an element of risk. Understanding that risk is just as important as understanding the potential opportunity. These are the foundations you need before moving on to more advanced trading concepts. Learn the basics, understand the market, build from there. If you found this lesson useful, subscribe to the Trading Workshop and follow along as we build the lesson step by step. Like the video and tell us in the comments what would you like to learn next. More lessons are coming, so subscribe and come back for the next one.